Welcome to the Belvoir DeFi webinar, Demystify DeFi. I am Lizanne Atherley, the founder of Mindset Capital, and I'm joined today by Stefan Bauke, the CEO of Belvoir Capital and his DeFi portfolio management team. Stefan, can you tell us a little bit about what we're going to be discussing today?
Yeah, thank you. Thank you, Lizanne, for the short introduction. Let me say a few words to the audience at the very beginning. When I look back in time, let's say 12, 14, 18 months, I never expected to hold a webinar on DeFi, because at that time I didn't even know what DeFi means and what it's all about. Now we are here with three specialists. We have Lizanne, who is a tech specialist anyways and hosting a lot of really exciting summits. And we are now the ability and the possibility to give you a little bit of a flavor about DeFi and the newest development in the blockchain. And I think we're ready to start now. Coming more and more people in, so I think we're ready to go.
Thanks, Stefan. Before we deep dive the presentation, I'd love my fellow panelists to introduce themselves today.
Hi, everyone. I'm David. I'm the head of digital assets here at Belvoir, and I manage our new DeFi income strategy.
Hi, my name is Jürgen Lankert, and I'm doing the investment advisory for the DeFi income strategy.
Hey, everybody. Welcome, and thanks for joining. My name is Adrian Marco. I'm head of investment solutions here at Belvoir Capital.
Hi, my name is Nadine Rütsche, and I'm the social media manager at Belvoir Capital, and I'm the host of this for this webinar.
Thank you, guys. So let's jump right in. I will share my screen if you just bear with me for a minute. So once again, welcome to the Demystify DeFi webinar from Belvoir. Just please take a moment to observe our disclaimer. I'd like Stefan to introduce the topics we're going to be discussing on our agenda today.
Yeah, for us, it's not so easy to start with a webinar about DeFi, not knowing exactly what the audience exactly is and the level of knowledge of the audiences. And we're trying to capture the overall broad development in the DeFi space and the crypto space, and giving you a little bit of a flavor what's DeFi it's all about and what the potential DeFi has in the new world of the financial development. And I think that's the key topic of today. And we will have a discussion, hopefully, with you later on with the Q&A.
Yes, we will go through all these topics, and then we will have a Q&A afterwards. Before we start, though, it would be great to get a flavor of what the audience already knows about DeFi. And today we're going to be using Mentimeter, a polling tool, so that you can participate with us. So to use the tool, please take your smartphone and scan the QR code. The first question is, who has ever heard of... So I'll give you a few moments to take your smartphone, open the camera, scan the QR code, and then answer the first question.
Lizanne, you got disconnected while you were asking the question. So the question is, who ever heard about DeFi before or has some experience with DeFi?
So let's go see what the answers are. Who has ever heard of or used DeFi before? Is everyone voting? Is everyone voting?
So no one heard about it?
Nobody's heard about it, looks like.
No. I did vote as well, so something might be wrong in the connection.
So it might be my connection, but let's move forward. You will get a preview of the next question before you are able to answer, but please don't answer until I ask. So assuming nobody has heard about it before, I'd like to ask David, can you help us to demystify DeFi? Why is it an important investment strategy today?
So I think it is important to also take a little bit of step back and see how the current monetary and financial system is like working. And in my opinion, it's at a very weird stage. So printing money is seemingly the new strategy to go to solve everything. It started in 2000, intensified through the global financial crisis and the European crisis, so where we started to see those huge debt bubbles occur and increase, and yields going lower and lower, and at the same time, a rise of central bankers and central banks. And then came COVID as the whole world stopped. So this was a moment where a lot of people in the industry were thinking, oh, this is the end. People were literally holding their breath and thinking, yeah, that's it. That's the big reset. That's the end. This didn't happen. And again, because of an amazing amount of money printing and ongoing fiscal stimulus. But parallel to this, in 2008, something beautiful happened in the technology world, the creation of Bitcoin and the blockchain technology. So if we fast forward to today, we have seen the fastest adoption of any technology ever in recorded history. And we're seeing a parallel financial system being built on that technology. And pretty much everything that we can do in the traditional financial world is replicated on the blockchain. And this whole system is decentralized, it's permissionless, and way more efficient. So perhaps this system is a solution for the problems in our current system. And while it's still early in DeFi, the growth is already massive, and it's not an experiment anymore.
Thank you very much, David. The growth has been massive. So let's try this again with our polling question. Let's ask the audience. Scan the QR code with your smartphone and vote on our second polling question. How big is DeFi right now? And I will ask my team members, if it does not display on my screen, can somebody jump in, as it is live on your smartphones? So let's see what the results are. We can see them. How big is DeFi market right now? Curious, or am I?
Lisa, and I think we got stuck with the poll because I still get the first question.
Well, we see some choices here. We have 100 billion, 150 billion, 200.
No, Lisa, and listen to me. We should go back because I still, when I scan the QR code, I get the first question. And not this question.
Okay, well then we need to reset the question.
Exactly. Start with the first one.
Who has ever heard of or used DeFi? That's the first question. It does not reset on my computer, but it is live on your phone, does it not? It's curious. Technology.
This is about centralized platforms.
So, but we have to kind of improvise a little bit, guys.
I think we move on, guys.
You help me a little bit. So
exactly.
It goes from 100 billion to 250 billion. David, what's the actual answer? We apologize for the technical difficulties today, but I'm pretty sure you can see the polling results on your phones.
Yeah, so the actual answer is it's almost $250 billion in total value locked. And that metric, total value locked, is a measure on like how much collateral is in that whole ecosystem. So it went from 1 billion in January last year to about 20 billion at the end of the year. And now it's sitting at over 200 billion. And we believe it will double until the end of the year. And yeah, one of the biggest single applications in that whole ecosystem is called Aave. And it's a decentralized lending system that allows user to lend and borrow. And currently over 30 billion are just used in this one application. And remember this name and that screen. We'll talk later a little bit more in detail.
Okay, so third time is a charm, hopefully, the polling. I'm going to try and ask our audience to help us. If you scan the QR code with your phones, you should get the third polling question now. When do you think DeFi was
I couldn't
created?
scan it, Lisa, and I couldn't scan it.
So scan the QR code with your phone. I'm going to give everybody some time. You should see the third question. Can you vote on the third question? When was DeFi created?
No.
No? Yes?
No.
No.
Okay, so we have some choices here. Between
it's still the first question,
2020.
exactly. Beat is just mentioning it's still the first question, and
all right,
that's
guys,
the same thing
we're
happens with
having
me.
some technical issues with Menti today, okay? So we have to improvise on this centralized platforms that we have right now. So we have choices we wanted to bring to you from 2000 to 2020. But Adrian, can you tell us when the actual launch date was?
So yeah, Lizanne, the first DeFi application was launched in August 2017.
Okay.
Although the big growth actually happened in the last year, I could say, or you could say, in the beginning, it was pretty much below the radar. It is probably easier to understand why there is DeFi and what the need for DeFi is if you take a closer look at the evolution of crypto and Bitcoin in total. So in the beginning, 2009, after the 2008 crisis, when Bitcoin and blockchain in general came up, it was like a live experiment to check if you can set up an alternative money system, a decentralized money system, which is going away from centralized institutions like the central banks, the commercial banks, the clearing houses like the SWIFT and so on and so forth. And the only question in the beginning was Bitcoin or some crypto token or crypto value to be on the blockchain stored and to be able to transfer from A to B. So that was the beginning of crypto and blockchain. Now, because that worked and you could have a decentralized system without middleman as an intermediary in the middle that works as money or other values or as other assets, that came up on the next slide. You can see the need, the natural need to exchange. People wanted to buy and sell that Bitcoin. After you could see that you can transfer, people started to trade it. But there was no real trading platform. So people needed actually to meet physically, in living room, in offices, anywhere, and exchange Bitcoin versus money in the beginning, or send the Bitcoins to another public address and wait and hope and trust the counterparty that he will pay you for it. So this is obviously not the ideal solution. So the next step in the evolution was, as you can see on the next slide, to apply centralized exchanges as we know them for stocks, for futures in the old world, to crypto and blockchain. So people needed to open the accounts with central exchanges like Coinbase, like Binance. There are a couple of big ones out there, and transmit the coins and trade them there and download them after trading in the market, so to say. That was a better solution than of course, meeting physically, but there are some disadvantages to this. So you have to open the account, as I said, you have to hand over the coins, you have counterparty risk, you have to share your personal data, and so on and so forth. And this is still not the ideal solution according to the crypto community, and there is a better way. And the crypto community already has come up with a better solution than trading via centralized exchanges. And the new solution is obviously decentralized finance, decentralized platforms, and we will hear a bit more about it now.
Before we do that, though, let's kind of reiterate for the audience and see how well they were listening. If the polling gives us an issue again, we can take you through the answers. But the next question is, if you scan the QR code with your smartphone, if you still get the first question, my apologies, but the question is, what do you think is the most important disadvantage of centralized exchanges? What do you think is the most important disadvantage of centralized exchanges? And true to form, it probably will not load.
It's still the first question.
Not loading, but these are the questions. These are the answers that we have. Is it lack of token ownership? Is it loss of personal data? Is it time-consuming account opening? Is it counterparty risk? So just to reiterate for the audience what the disadvantages of the centralized exchanges are. And I know we don't have the voting results in, Adrian, but can you answer the question for us? Which is the most important disadvantage?
Well, I think they're all important, and they are all the reason why DEX and decentralized finance now exists. I would take probably the counterparty risk, but also not my keys, not my coins, so to say. So I have to give up my coins to the exchange, at least as long as I trade them, before I get something else back. But I think they're all equally important, probably. So yeah, this is the real answer and the reason why we have DEX and DeFi today.
Thank you, Adrian. Jürgen, I'd like to jump over to you and talk about some innovation that's happening within the centralized exchange market. Can you walk us through DeFi and what
yes.
it is?
So now we're coming to the next innovative step in the crypto evolution, which brings us to DeFi. To bring an exchange into the decentralized blockchain world, you need to replace the centralized order book, which was Adrian just talking about. And this is done by the so-called liquidity pool, which you can see in the middle of this picture. And if you're looking to the right side, you see Jack. And Jack is a trader, and Jack trades his crypto tokens against this liquidity pool. But how is this done? These liquidity pools usually contain two different crypto tokens. And Jack has taken out one crypto token while putting in the equivalent of the other crypto token at the same time. And by the way, that's the reason why this arrow is two-sided. Jack is putting it in one token in and taking one out, and he's doing that within one transaction. He's doing that directly from his personal wallet. He doesn't need to register himself in the liquidity pool anymore. He just connects his wallet, and everybody can do that from anywhere in the world. You just need access to the internet, and you can do that at any time, even in the middle of the night or at weekends, because the blockchain never sleeps. It's open 24/7. Technically, Jack interacts with the liquidity pool via a smart contract, which is a small piece of software which can't be manipulated. And so there's no other counterpart involved anymore. But Stefan, you have a pretty good real-life example what a smart contract is for and how it works.
For the audience, which is not so familiar with the DeFi yet, as I was almost a couple months ago, I was trying to get an image from the old world to the new world. And my image, which is not 100% correct, but my image was, for example, a football game and a football and the how you say the rules on football. And you can decide which part you want to take on that football game in a stadium, for example. It was Manchester against Liverpool 2 days ago, and you decide whether you want to be in the audience and you pay a ticket and you're watching it, or you want to be the coach, or you want to be on the pitch and being an offensive player or defensive player, or you lend someone and you are the audience, or let's say you are the stadium. And for the stadium, you provide kind of the infrastructure, or in the new world, the liquidity. And it's a completely different mindset compared to that what we've learned in our history. It's a completely different setup in thinking. It's a decentralized, democratized, and liberty rights free choice of yourself. So you can decide whether you want to be Jack or Jane, whether you want to provide liquidity or you want to get liquidity, whether you want to stake or lend, or you provide the liquidity. So, and the smart contract is the rule, like the football game on the pitch, who defines and who sets the infrastructure. And there are several smart contracts out there, or let's say several platforms out there, and you can decide where you want to join and how to join that game.
Yeah, and due to that smart contract, there's no other person involved anymore. And by the way, that's the reason why it's also called automated market making, or in short, AMM. And in our case, in this example, the smart contract ensures that Jack is putting in his crypto token on one side and getting out the other crypto token on the other side, both within one single transaction at the same time immediately. His tokens basically never leave his wallet. And to sum up the advantages of the decentralized exchanges, again, there's no account needed anymore. There's no counterparty risk or exchange risk, and we have an immediate settlement, which is a huge innovation. And but to make that possible, you need to have liquidity in this liquidity pool. And that is where we step in. The DeFi income strategy provides the liquidity. So if we're looking to the left side now, you see this nice looking girl, and she's called Jane. Jane is a liquidity provider. She puts in her crypto tokens into the liquidity pool. She provides liquidity and facilitates the trades. And in return, she receives the trading fees, which are paid by the trader Jack. And so the liquidity providers, they are passive and earn a fee for their service.
Okay, I think that's a pretty good description. That automated market making is the innovation that allows the decentralized exchanges. I'd like to kick it out to the audience once again, if we can get the poll working or not, but we can discuss what you remember from what we said about the disadvantages of the most important advantage of a decentralized exchange. If you scan the QR code with your smartphone and it still gives you the first question, no worries. I will take you through some of the most important advantages of the decentralized exchange market.
We got stuck at the first question, Lisa.
Okay, that's
so
okay.
We just move on. We don't ask anymore.
We have some technical problems, but I just want to reiterate for the audience that these are the most important advantages of a decentralized exchange: ownership of tokens, privacy and data protection, and instant access from trading everywhere. And all of them are equally important, just so we understand that. Now, I'd like to ask again, you said that there's been a lot of growth in this market, but what has been the pace of growth in the average trading volumes in the market?
You want to ask me now, or that was originally a question for the audience, right? But
Sure.
however, I can, yeah, there it is. And the growth was just huge. The trading volume increased 800 times over the last 12 months. So.
Wow.
Yeah, and again, that's what I just was saying, that the decentralized exchanges are a huge innovation and they're disrupting the market. They are growing so fast and demanding so much liquidity, and as they need so much liquidity, they pay such high returns.
Okay, so thank you for that. So we know what the average daily trading volumes how they've grown over the last 12 months. They've grown 800 times. David, I'd like to ask you, what other platforms are out there?
I mean, there is so much going on in that space. There are hundreds of platforms, applications, new ideas, new innovations, and sometimes it's like really difficult to get your head around it. And we see really an explosion of projects and use case, because, like, as we briefly mentioned before, with DeFi, anybody can be a user of the system. You can lend, borrow, send, or trade cryptos, but the really innovative use case is also that you can be a contributor to that world. So you can, if you have some coding skills, you can create an application and you can put it out, and you have instant access to the whole new financial system, and everybody else can access it. There is no government or a central bank who says, you are allowed to be a bank, you are allowed, but you there, you're not allowed. You're not allowed to participate. So it is really a free system that creates so much growth and innovation in such a fast time.
So there was a question from the audience that we should take up some of the information given on the chat. I think one was, how do we cope, or what is the AML? It's like the anti-money laundering thing on the decentralized platform. Is this something we can tackle and we can answer, Jürgen?
Yeah, I think this is one of, however you see it, one of the advantages. You don't have to do the AML. You just create a wallet, and you have a public address, and with this wallet you connect to any DEX, and you can join. And again, everybody can do it. Even poor people without a bank account, no matter what religion, gender, or color, you just can join the decentralized finance market.
And the possibility to abuse the DeFi market, is it there? Because it's always a big discussion about this.
I think from a regulatory perspective, this is not solved yet. That's indeed a good question. And there are some platforms already evolving that are only allowing, even on decentralized platforms, to trade if you went through the full KYC in order to make sure that this system stays closed. So this is controversial. It has many advantages because everybody can join. But some disadvantages which have not been cleared yet by global regulators, and they are on the topic.
We'll leave some of the Q&A for afterwards. These are very good questions. We have a lot of interest and curiosity today, but I'd like to ask David, so is automated market making the only way to cash in on decentralized exchanges?
No, it's not the only way. It is definitely one of the biggest areas. So you have that market making activity, and then you have also the lending and borrowing sector, let's say it. And those two strategies or applications are also the one that we focus in our DeFi income strategy, because they have the least amount of risk and the most stable and predictable returns. How does that lending and borrowing work here in that new fields? Traditionally, to get a loan, you had to go to a bank or to a financial institution who had a lot of cash, and then the bank will ask for collateral like your house or salary payments and exchange for that loan. But DeFi is completely different. As we mentioned before, there is no bank, there is no middleman here, and instead there is a smart contract, like that computer code that does the heavy lifting and makes clear that the transaction settles sophisticated. And the biggest, as we talked at the beginning, platform of that lending and borrowing market is Aave. And if we jump one or two slides forward, I made a screenshot of Aave this morning. And here, I also invite you perhaps to go on that website, aave.com, and like explore a little bit for yourself what's going on there. You see on the left side, there are some assets. They are all US dollar stable coins. And now everybody who owns crypto assets, and it can also be Bitcoin or Ethereum, everybody who has assets can go to a protocol, provide those assets into that capital pool, deposit those assets, lend them out, and then it allows a borrower to come in and access the capital. And through that process, finally, without the influence of the Fed or a government, we have again a real money market, a real market with demand and supply, and that creates again finally a price for money. So the yields that we are seeing here are 3, 10, 7%, and that sounds not bad, right? Compared to what we are used from the banks or from bonds, that's really great. But there are really other opportunities in DeFi out there who even have higher yields.
And so the higher yield opportunities or higher yield strategy is the automated market making strategy that we were discussing before. And I believe that's the one that you're predominantly using at Belvoir. Jürgen, can you walk us a little bit through how you're making money with the automated market making strategy for DeFi?
Yeah, I will. Lending and borrowing has its return profile, but the return profile of AMM, automated market making, is just better. The DeFi income strategy mainly facilitates trading on decentralized exchanges. And as David just explained to us, the lending and borrowing, I would like to give you a little deep dive on how a DEX looks like, and I would like to start with a trader's perspective. And here we are on this screen. We see a decentralized exchange called Vault, and we are on the Binance Smart Chain, which is just another blockchain comparable to the Bitcoin blockchain or Ethereum blockchain. And on the upper right side, you see this fancy number, which is my personal public address on this blockchain. And that indicates that I'm already connected with my wallet to this DEX. And as I'm already connected, you can see in the highlighted box in the middle that I have 209 Binance US dollar in my wallet. So I could, for example, take 100 Binance US dollar, sell them, and buy 106 Vault US dollar for it. I just have to enter the amount, click the swap button at the bottom, confirm with my wallet, and then the trade is done instantly. Again, I don't need account. I just connect my wallet. I don't have to send my tokens to any third party. I don't have to trust anybody. But so that somebody can do this trade, there needs to be liquidity in this specific Binance US dollar, Vault US dollar liquidity pool. And that is what the DeFi income strategy is doing. And how we do it, I'm going to show you on the next slide. The next slide shows liquidity adding section. It looks pretty similar. On the upper right side, we still see my public address. So I'm still connected with my wallet. And in the middle, I could choose the tokens I would like to provide liquidity for. In that example, Binance US dollar and Vault US dollar. Of course, I have to have these tokens in my wallet. Then I just enter the amount, click supply, confirm with my wallet, and the liquidity is added. And from that moment on, I start earning my share of the trading fees. And of course, that also was a question in the chat. I can unstake my liquidity at any time and get my money back. On the next screen, we see a typical farm section of such a DEX where all the liquidity pools are listed. And in the middle, you can see 3 examples of stablecoin liquidity pools. On the top is Vault US dollar, Binance US dollar, where we just added liquidity to. The second one is True US dollar and US dollar Tether. And the last one is US dollar Tether and Binance US dollar. So all 3 are US dollar stablecoin liquidity pools, means the tokens in these pools are all packed 1-to-1 to the US dollar, and they are more or less the same. But the returns are not. As you can see on the right side, the APR, which is the yearly return, which is paid by these pools, they range from 2.3% to up to 15%. And this is because the Vault DEX is currently paying some extra rewards for the Vault US dollar, Binance US dollar liquidity pool to attract even more liquidity. And that is what the DeFi income strategy is doing. Screening the whole market all day long, screening all the hundreds of platforms which are out there on different blockchains and finding the best opportunities.
So just so I understand and to reiterate for everybody, would it be fair to say that the majority of the return comes from hunting for liquidity rewards on the platforms?
Yeah, that's correct.
That you're just better at doing that at Belvoir?
Sorry, say it again, Lisa?
And that you're just better at hunting for the rewards.
Yeah, of course.
In terms of your strategy. I'd like to ask Stefan now, how can people learn more about the Belvoir strategy? You're muted.
With all strategies, which are, and as we've just seen it, it's not easy to do it, right? Because you have to do a lot of research, and we as asset managers in a multifamily office, we're used to diversification, we're used to research, and especially on the DeFi, there is intensive research because you have to look what's coming up, how big is the existing smart contract already, what's the liquidity, how are the movements of the liquidity, and what are the rewards compared to the risk you're bearing, because there is risk. It's not mainly the counterparty risk because it's decentralized, but it's the risk that, for example, a question was asked in the chat before, what happens if all market participants trying to get out of this smart contract, out of this DEX platform at the same time? So these are the things we have to look at, and this gives a little bit of flavor about what we're doing. And we are only doing on our strategy for this DeFi income strategy, kind of a money market replacement in the blockchain. It's not that we are hunting for yields by buying, for example, Bitcoins or Ethereum coins and staking those things. Like when you lend out your Tesla stocks, you still are addicted, or not addicted, as you're pegged to the price movements of Tesla or to the price movements of to Ethereum. What we're doing is just lending out and exchanging in between the different stable coins, and therefore we don't have a price movement to the underlying crypto coins, let's say altcoins. We are just 100% in stable coins. So this is very much of a difference. A lot of people using DeFi for yielding, hunting for yields for 50, 70, 80%. That's not what we're doing. We're trying to keep it very stable and diversified, and also on different blockchains. And I think this is a difference here to other people and market participants. So we decide to lend out the stadium to the audience, going back to the football and getting the entry ticket price, and we know the stadium will be there, will be not an earthquake the next day. So that's what we do. We're not trying to shoot the goals and win the game. And how do we combine now the old world and the new world? If you would have enough time, and as I see it in the chat, there are a lot of participants who have a deeper knowledge on DeFi. Everybody can do DeFi themselves, if they have the research capacity and the ability and the time to go onto DeFi and the platforms and stake and lend and provide liquidity to the pools and make a lot of money on it. But not everybody is keen on doing this and doesn't have the time or the knowledge to do so. So what did we do? We combined the old world, the old fiat world, where you can easily trade or buy a security. It's called an ETI, which are the partner in Liechtenstein with IMAPs, and they provide a daily liquidity through a stock market, the old stock market on the Stuttgart Stock Exchange, as a certificate, and we trade that into the secure wallet and into the DeFi world. So we're providing the liquidity on a daily basis to our investors, and they buy euros and can easily access our strategy. That's how we do it. So we combine the old and the new world. We connect it. We build the bridge.
Well, that brings us, thank you, Stefan. That brings us to the end of our presentation today, but we are going to have Q&A. We have a lot of interest in the chat already. I will stop sharing my screen so that you can see the team members better, and we can answer some of your questions in the chat. So we have a couple of questions in already. Who are the main borrowers, please? Somebody's asking that. Who would like to answer that question? Adrian, put your hands up, I see.
Yeah, thanks, Lisanne. So I think that's the beauty about decentralized exchanges. The borrowers is the market, and the market is all users in crypto, all people who demand a credit, a loan, so to say. Now, the next question will be, how is it collateralized? So usually people who demand a loan, you know, the long Bitcoin, long Ethereum or other assets, they just put in a smart contract, and a part of it is being used as collateral. And as soon as the value is going down, they're getting liquidated. So the loan or the credit itself is pretty safe, you could say, for the one lending out and receiving the yield. So the beauty about it is there is no middleman anymore, except the smart contract itself, which is not a middleman, it's just a tool. And this is what is so great about this new world, if it works.
There's another question in the chat now that you talked about smart contracts. It says, could you dive more into smart contract risks and impermanent loss, please?
Who wants that?
You're not going to go for that, Adrian? Who wants to cover the smart contract risks and impermanent loss?
Yeah, smart contracts, of course, they have a risk. That's the risk that they are not well coded, and that is the reason why we have a set of rules. We have a strict investment process, and we only use smart contracts which are audited, and we only use platforms which are well established to tackle that. And the impermanent loss risk, of course, is if you have two volatile crypto tokens which within one liquidity pool, and the trader Jack is just buying one crypto token out of this liquidity pool. The liquidity provider Jane might end up with having more of one token left, and the other one went up in price. So she might have been better up if she just capped the both tokens and sold the one at the very top instead of selling it all the way up. But to avoid that, the DeFi income strategy chooses the stable coins, because the stable coins, for example, US dollar stable coins are packed all to one US dollar. And so we do not really care whether we own more of the one stable coin or the other.
Speaking of stablecoins, there's a question specifically from Andrea Schaub. It says, could you go into the risks of stablecoins? Example, not necessarily being 100% backed by actual dollars? Question mark.
I think
that contradicts what you just said, but that, like, a little bit. So
I think that's a very good question from the audience. And because this is really a key point for us in the whole investment and research process, to really focus on those stable coins where we think that they are safe. And in the market, there are different stable coin brands from different company bodies who all have different pros and cons. And it is really our job to decide which one we like and which ones we don't like. And part of creating that diversified portfolio, and again, our goal is to have a conservative product, a blue chip product. And part of that diversification is that we decide, okay, if there are stable coins who we deem risky, then we do not want to have them at all in the portfolio, or perhaps we have 5% in the portfolio because there is here a crazy yield opportunity, but it is part of the risk parameters.
Okay, and speaking of your portfolio, Stefan Gewert has a question specifically about your certificate. So how much volume is in your certificate? How high are the management fees? Bid-ask spreads? How much volume have you invested in it as a management team yourselves? So Stefan's putting you a bit on the spot here, guys. Who wants to answer that?
It's a very interesting question. You always put your money where your mouth is, and we started and seeded the certificate 2 weeks ago. And the funny thing is, as fast as the DeFi is, as slow is the old world. And it took us 2 weeks to get onboarded and listed and get the money from the old fiat world into the crypto world. As long as we're there, we are happy to deploy more. For the time being, it's a single-digit million number, which we put ourselves with interested parties here and friends and families. So to test this, and we kind of kickstart this now, end of October, beginning of November, with a larger amount. So what is the fee on it? The fee is, for the management, it's a 2% fee and a 20% performance fee, because there's a lot of research to be done and a lot of know-how and knowledge to on a constantly basis be done. So that's the reason why it's kind of a hedge fund fee structure. Bid-ask spread on the certificate, it's 50 basis points on the stock exchange.
Thank you. We ask if you have a question, please write it in the chat and I will make sure to ask it.
There are already more questions, which are really, really interesting.
So maybe you pick one, Stefan. Which
yeah,
one
Thomas just asking, why are some crypto platforms like Swissquote or Liquidity not allowing for staking crypto? Who can answer that from you guys?
Well, I think Swissquote is a counterparty. So you're having an account with a bank. So you are basically already decoupling from DEX, from decentralized finance. You are centralized somewhere because you run an account. So there is an impairment or a asymmetry between Swissquote taking your assets and staking them or lending them out. And I think they would have to take a margin on it because they take smart contract risk, the risk that we spoke about before. So I think that's the reason why they don't do it. There are some brokers who do it. They take a margin. So if you go on Binance, for example, you can also stake or lend, but they take a margin to the DEX market. So what we are doing is we're going directly to the DEX market in that case and saving this margin. There are some other things to be done regarding custody of the assets, etc. So there's extra work for it, but you're not paying a margin to a centralized bank or a counterparty once again. And I think this goes hand in hand with the other question, which was being account owner at Bitstamp, who I am, trader, or am I a trader or am I a liquidity provider? So again, in this case, it depends because Bitstamp is a centralized exchange. You have a counterparty risk with Bitstamp. It's an old model, so to say, which works well. And you can place orders, then you are a liquidity provider, or you can just buy or sell at the next best price in the market, then you are a trader. However, there are fees involved from Bitstamp, commissions, etc. And this is exactly what in the decentralized world we are taking as an advantage to take out the middleman, to take out Wall Street basically, and we go peer-to-peer and we provide the liquidity and try to make some money there. And at the moment, the average yield, I think there was a question as well for what we expect. At the moment, we are north of double-digit returns expectations for the entire portfolio at a pretty low risk. This may change in the future, but this is what the market currently pays for the work that we are doing.
So There's an interesting question from Thomas Zweifel as well, and he asks, and maybe it kind of finalizes the point you made about staking crypto and the old world. Is staking crypto analogous to getting an interest on lending money in the old world?
David?
I think it's a good analogy. Yeah, I think it is similar because, for example, now you can stake Ethereum until ETH 2.0 comes out. So this creates basically the base layer, the risk-free rate in crypto for yield. So I think there is a good parallel you can make here.
The big difference here is, back to that question, the counterparty risk in the DeFi world. You don't have the counterparty risk as you have it in the old world. So when you lend money to A, you may have to make sure that he's going to pay it back, or you need a collateral, either something else or what's there. There was a very interesting question I asked myself as well to Oko. He is asking, what do we expect the total value locked to be in 5 years' time? I think 5 years' time is very long down the road. It just exists a year or two. But given the speed we see as we see it right now, I think we're going to hit 1 trillion anytime soon, maybe already next year. And I personally expect that we will have 5 trillion in 5 years' time. Because as we can see it, as Adrian mentioned it at the very beginning, we started with Bitcoin 1.0, peer-to-peer lending, peer-to-peer exchange. Not very kind of first evolution step of internet, right? And when you look now at your smartphones and how we're using the internet today, is a big step in between. But the speed, as David mentioned this, in the blockchain is much faster than the internet. Internet took 30 years where we are right now. With the technology we have, with this know-how we have, and with all the brains going into the blockchain right now, the speed of development would be much faster, and we will develop from this first blockchain Bitcoin thing to the DeFi and even more applications within the DeFi within the next 2 years with 5 times the speed we had in the internet. So my best guess would be the 2 trillion will be reached maybe already 2022 at the end of the year. Nobody knows, but as I can see it, the advantages compared to the centralized exchanges where I have my account at Binance or Bitstamp, and they charge a lot of fees, much more fees than you get. It's the DeFi world. It's a democratization of the blockchain. Everybody can participate, even with $1 or $2 or $5. Doesn't matter how much you're going to lend, you're going to trade, because the fractions allow it in the blockchain to trade as much as you want and stake as much as you want and lend as much as you want and provide liquidity as much as you want. And you can re-get it to your private wallet every second. This is such a big mind-blowing thing. So listen to that, what we're saying. It's instant every second, and you can lend the money and you can get it back the next second if you need it. Where is that possible in the world? Not one bank is possible to deliver that. Nobody is doing that. So it's completely a disruptive technology, and there is no middleman in there anymore. So I personally believe this has the potential. A DeFi blockchain now has the potential to wipe out the financial industry, to be honest. I don't know it's going to happen if the central banks and the governments are going to allow it, but compared to the centralized exchanges where they can now say, okay, we need more control, where we need regulation, where we can control the asset inflows and outflows. On the DeFi centralized world is completely impossible. Why? Because it's all around the world, and there is not one person you can claim and say, here, you are the one. You have to make sure, like Facebook, you can go to Facebook and say, either you help us and you give us the information, what it's on your platform, or you're down, and we carve you out of the market. On the DeFi, it's completely impossible. Right? Correct me if I'm wrong, Jürgen, but that's the big disruption here in this development. And this gives me also hope for the new system, because we're coming to an end in our old world with the fiat system. The national banks and the central banks are not able to provide that liquidity any longer, and the DeFi world showing us the path. Exactly. Beat is just mentioning this. They only can control the money flows from fiat into crypto.
Yeah, exactly.
So, and as long as the fiat world goes more and more into a very bizarre environment where we issue tons and trillions of dollars and euros, the more and more the DeFi world becomes interesting, right? And the more people join the DeFi world and the crypto world, the more it will establish a parallel financial system. It could be revolutionary. We have no idea how it's going to end, but this is something which has the potential for revolution. It's not only a potential for financial disruption, it's a potential for a revolution.
I think it already is, and it's happening. Like the internet has changed newspapers and communication in general. So this is the revolution or next step of transactions rather than information. So
Sorry, Adrian, we've been asked in our first calls we had with a couple of our family and friends before we started the strategy, what is the biggest risk, and is it possible that the blockchain will be forbidden or will be sanctioned or whatever? And I think it's already too late. And we saw this, like China said, they banned, like for the 8th time since history, Bitcoin. But now, since last week, we have the first kind of ETF live on Bitcoin, and the US will not ban it anymore. I think genie is out of the bottle, and there's no more chance where you can stop innovation. Innovation will always survive. We have seen this in the last 500 years. Innovation will always survive. They were trying to ban smart internet telephones in '93. Remember, Adrian?
True.
Now what we're having is a chat on Zoom. So
Nobody's
we're not very successful by banning it.
No.
The same happened with the horses going into the cars, and so on and so forth. There are many examples in the last 500 years where innovation brings us to the next level. So I'm very positive about the future. I'm not so negative, but it will change the world for all of our lives.
I think Fabrizio had a really interesting question that I think Adrian can take. Among possible DeFi risks, do you think some huge operator could acquire the majority of the government tokens of a DeFi platform and so control the market?
So Fabrizio, that's a good question. Actually, that is definitely, yes, the case. It is possible. And it is part of our portfolio management to monitor these opportunities and risks on the other hand. And this is part of our investment process. And I think Lisanne and Jürgen mentioned before, in a funny way, we do it better than others to find the good yields in the market. It's not only that we do it better or if we do it better, but the universe is so large. There are so many different smart contracts, so many different decentralized exchanges, so many different tokens. So the sheer process of structuring the investment process and looking at, for example, your risk that you've mentioned, the government taking over the DEX, is the investment process that we're doing. And there's enough juice in the market because the growth of the DEX and decentralized finance is so huge that this is what you have to do the whole day in a structured way in order to deliver the attractive returns and try to control the risks involved in the way that you're monitoring. And this is the reason why actually we set up also our product, and our portfolio management is active there, because it's such an interesting opportunity, at least for the next couple of months, probably years, I guess.
Very interesting question coming from Michael Becker. And we experienced this during 2021 several times when Elon Musk carves what happens and what's the impact on crypto. And the funny thing is, the more he carves, the less impact he has. So, and we've seen this, it's not only Elon, it's also China. China carved a couple of times and had a big impact at the beginning. The last time China carved and said, we're going to ban Bitcoin for Chinese people or whatever. What happened on Bitcoin, Adrian? I think we lost 3%, 4% or something like this.
I think the impact is getting less and less because the market is simply growing.
Exactly.
And this is pretty normal. Yeah, it was funny when he let out his comments, but I think it's diminishing slowly but surely. So I wouldn't pay too much attention. It's the same with China bans, as you mentioned. They banned it more than 10 times. They have reasons to ban it, but they have not succeeded. And America came back. The Federal Reserve recently, Powell said, they don't intend to ban it. So I expected to get regulated. They will try to regulate more if they can and tax it, but not forbid it. So yeah, I wouldn't be too worried about that. And we've been hearing these doubts for many years now.
We have about 3 minutes left, guys, and there are some really interesting questions coming into the chat right now. We haven't heard from too much from Jürgen and David yet. Would you guys like to answer a couple of questions that are coming in?
Yeah, maybe
really
let me just grab the question about the tether, because I think it's already the second time that tether is mentioned in the chat. And currently, we are avoiding tether, and currently the DeFi income strategy has no exposure to that tether. I think we won't be able to avoid it completely in the future, but we definitely try to go around it.
I'm very thankful for Stefan's question, because when I did my research on Tether, I came up with exactly the same thing. And Jürgen said, no. Tether is definitely something we have to look at, because they have been under scrutiny, but they have been proving some evidence. But I'm also on the same side as Stefan here. Next question from Stefan Sachsenhauser. Yes, that's exactly what we're aiming for, is the 15% net of fees return. It's in between 10 and 20. So the people who are more familiar with the DeFi yield, the yield is fluctuating as the inflows and outflows of assets define the yield. And therefore, the yield is fluctuating. It's a kind of a floating rate note on a daily or even instant basis, but that's what we're aiming for. And we've seen yields in between 5% when we had the big crash, David, in June, July, something like this. And now we're back up at 20% yield. So this will fluctuate, right?
It's so based on demand. And if the market is hot and if people want to invest and want to trade a lot, then there's high demand for stable coins, and then the yields go up. One of the question was, are you purposefully excluding platforms that provide incentives? That is a really important point, because in the DeFi space, there are different platforms and they are competing. And they sometimes have incentives programs where the yields are double. And then when we analyze the market and we see an opportunity like that, then we decide, okay, if it's conservative, if it's safe, then we move assets there to get that opportunity and get those yields.
So it's something like 2 for 1 when you go into a shop and buy something. So then you go into Lidl, into Aldi, and you buy. And when you trust into Lidl and Aldi that they provide a nice food, whatever it is, then you buy it. And that's kind of the same thing here, I would say. And correct me if I'm wrong, but I'm trying to build some images always to understand the very, very theoretical world of DeFi.
Well, I think that was quite an insightful discussion, presentation, engagement. Apologies again for the poll, but we had quite a significant engagement in the chat room. We are at the end of our session. It is noon. Unless the team wants to take one more question, we can wrap it up.
Please. And I didn't mention that before, but I reward the people for the really good questions. I really like it.
They're very good. And what's the best way to get in touch to learn more about the Belvoir strategy?
Yeah, please feel free to contact us. Everybody who has been invited knows one of our guys, at least, in the team or at Belvoir Capital. Please engage with us. We're not only here to sell our strategy, we're evangelists, and we would like to convince the people to join the blockchain and the DeFi world, no matter if they do it with us or they do it themselves or they do it with whoever they find in the market. Please come and feel free to join and to discuss this with us, because we need to be there. Adrian said you cannot avoid to miss it. And that's why we're here.
Just one final laugh as we end. We get crypto rewards for our questions from Thomas.
Thomas, I'm going to reward you personally. I don't know how we do it, but we reward you personally for the good questions.
Thank you, Thomas. And thank you guys for joining us today. We appreciate your support and your questions, and we hope that you continue to engage with us on crypto strategies webinars with Belvoir. Thank you very much.
Everybody.
Bye. Bye, everybody.
Thank you. Bye-bye.